Well, as Austin covered, the state angle here is predominantly one of the consumer protection role. And at least in recent years, it's been related to the oversight of the student loan servicing agreements and for the borrowers. Because, as someone who worked in a legislature before coming to NCSL, it is something that legislators hear about basically every week from constituents about questions about forgiveness. I don't understand my payments. I can't get a hold of my servicer. And I think that combined with the broad sort of understanding of the impact that student loans are having on state economies is pushing legislators to be more interested in doing something about this from the consumer protection angle. So it really is a recent development. Since about 2015 was when we really saw the first state look at doing this in a substantive way. And since then, there's been about a dozen states that have passed bills on this and about 20 more that have considered or are currently considering legislation. And the general function of the legislation is bills related to directly imposing requirements on the servicers and regulating them through either a state Department of Banking or some under state lending laws, or I should say, because some states have done both, creating a student loan ombudsman that sort of manages, it's usually located in the state attorney general's office, to sort of manage the repayment and working with the servicers as well as helping the borrower. So those are the kind of bills that we've seen states and legislators be very interested in recent years. And it definitely peaked in 2018, 2019, especially after the 2018 elections, where there were some chamber flips that definitely put some chambers in a situation where they were really inclined to do this, especially what was going on then at the federal level. But it's really been an area that the states have taken a much broader interest in the past few years, and has definitely led to some conflict, at least in the past, with the federal level. And I know Austin has a much deeper understanding of what has gone on there.
In the quick hit, there's an active question of whether or not states actually have the right to regulate student loan servicers. And that's because the federal government has exclusive domain over these loans and is given authority to manage these, hire these loan servicers, but also manage the contracts. And so there's a question of whether federal law can actually preempt state law in this case. And there's been divergent opinions from courts, but also even within political parties. The Trump administration issued an informal guidance document that basically said that federal law does preempt state law, and that these state regulations are not enforceable because this is the exclusive domain of the federal government, and the states can't put additional restrictions on federal law. The Biden administration is expected to be a little more friendly towards, I think, states in this regard, and I think there's the question is whether state regulations can coexist with federal regulations. We've seen some lawsuits that have been brought over the last couple of years that have sort of led to kind of an open question of whether this is possible. But I think the real weigh-in is going to be from Congress, and to sort of clarify standards for student loan servicers and clarify whether or not states can manage the process as well. So it's a really interesting question. It's a very wonky question. It seems a very legal question. But to sum up, the federal government has an outsized impact on student loans because they're the ones that originate them and indirectly manage them.
Thank you both. And Andrew, you talked a little bit about kind of what I heard you say is that when states are getting engaged in this space, that they are, it's almost kind of on the borrower defense side, if you will, kind of putting regulations and putting rules in place to kind of manage some of these services, right? And what that says to me is that that's a good thing, because I want these borrowers to have some type of regulations and some type of rules on the road, because it protects me. I know that one of the things that you also have been doing in terms of tracking the state level kind of engagement in student loans is the database that you've created. I'm wondering if you can talk a little bit about that and kind of any other kind of emerging things that you say.
Yeah, so we've had the database for a little over a year now. We've been tracking things for a couple years before that, really internally, and building it out. But so the majority of the legislation that we see falls into sort of a few categories. The first is that oversight piece that we talked about, which is really the Borrower Bill of Rights, ombudsman bills, and the regulations on servicers. There's also kind of a third branch to that, which is bills that require the public institutions in a state to provide more information to borrowers and disclosures about what their loans are going to look like before they graduate. There's been a few that are requiring them to have a borrower, education course so that they can try to understand their loans better before they graduate. So that's kind of the oversight piece. About half of what we see, though, are related to forgiveness bills, which is a very different discussion than the forgiveness discussion at the federal level, because at the state level, these bills are predominantly, in almost all cases, very narrow, targeted bill proposals. We're talking about like 100 people, enough funding for 100 people to get $5,000 off their student loans if they're working in a certain workforce area. And almost all that we see in the workforce areas are related to healthcare professions, and education. So teachers and then doctors, nurses, particularly in rural areas, that's kind of the most common structure that we see. There was some interest from a couple states before the pandemic to kind of broaden these forgiveness proposals and do more of a statewide talent retention approach to this, to forgive loans if you stayed in the state after graduation or working in a certain high demand industry sort of across the state. But in large part due to the pandemic and just the disruption that states have had over the past year, we haven't really seen any of those gain sort of significant traction. But the forgiveness bills are a major chunk of what we see, because a lot of legislators view it as a win-win, that they can do some workforce development and then they can also address student loans in the general sense. So that's about half that we follow. About a third that we see, of all the bills that we see introduced, about a third have become law. So that's a pretty good chunk. And then there's some smaller issues that we see. States do have some control over consequences for borrowers who default. There were, as of a couple years ago, there were a couple states where you could lose a professional license if you defaulted on your student loans, and that's been reversed in a couple states in recent years, I think under the logic that if you lose your professional license, you're probably going to struggle to have income to make your student loan payments. And then we've seen, there's bills related to tax credits and interest on student loans for state taxes. And we've seen, there's topics like income share agreements have been proposed in a few states, not enacted in any. I think legislators are very interested in that topic, but unclear on how it would really work at the state level. So that's sort of the general categories that we see at the state level. And I see you've shared the database, and happy to answer more questions about specific areas there.
Wonderful. Thank you thank you both for kind of clarifying kind of those differences, and also Andrew, for speaking a little bit more about what's happening at the state level. As you said, I did share the database in the chat, so if folks are interested in seeing if anything's happening in their home states, you can check out the database there. Shifting, you talked a little bit, Andrew, about kind of forgiveness at the state level and what that looks like, right? And kind of the scope and scale of that of those types of forgiveness programs. And I want to give Austin an opportunity to talk about that at the federal level. And this idea of student loan or student debt forgiveness is all over the news right now. President Biden has suggested that he's open, at least last I heard, to forgiving up to about $10,000. We've got senators like Elizabeth Warren and Chuck Schumer who are, they're saying $50K. I think if you ask Bernie, he'd say forgive it all. And you got some folks that say, no, you got it, you're stuck with it, figure it out on your own, right? So I guess I'm wondering, and I think that probably a lot of people on this call are wondering, how would you characterize kind of those arguments for and against? It's kind of a two-part question. And what's the likelihood that we're going to see some type of forgiveness, maybe in my lifetime, or in yours, right? Where are we?
I mean, this is the big question. It's a fascinating question. It's personal for so many people. I want to start with some context on what exists around loan forgiveness. Then we can talk about for and against and whether it's going to happen. But as it stands right now, there are at least three-ish paths for loan forgiveness that the federal government currently offers. They do, you know, you do have your income-driven repayment plans, and that's basically if you make enough qualifying payments over, usually it's a 15 to 25-year timeline, you'll have the remainder of your loans forgiven. Obviously, as we've noted, there's a lot of issues with the income-driven repayment plan program. There's also the public service loan forgiveness program. There's also some loan forgiveness programs for teachers. You know, those are set up to where if you make 120 qualifying payments, then you'll have and you work for the right employer, then you'll have your loans forgiven. But there's been, I think, you know, only 1% of participants in that program so far have actually had their loans forgiven. There's a bunch of problems with that. It can be really difficult to manage on the borrower side, and then the federal system for managing that has also been pretty poor. There's also what's called borrower defense to repayment. You can have your debt potentially forgiven if you're defrauded by your college or the school closed. This has been sort of a policy that's been in flux. The Obama administration first released these pretty expansive regulations, and then the DeVos administration rewrote them. Essentially, you know, one of the big things that they did there was that before, if one student, you know, was defrauded, that there's an option for there be class action forgiveness. In other words, if one student could claim misrepresentation at one institution, then it was likely that it happened to others, and so there could be, you know, loan forgiveness en masse. But the DeVos administration took that option out of the table for borrower defense to repayment claims. But it's expected that the Biden administration is looking at these again and will change that. So there is a universe of forgiveness options out there right now, and I think, you know, and the polls between there will never be forgiveness and the Bernie plan, I think that these sort of existing programs are probably that middle ground, but there is of course the bigger debate on just general debt forgiveness. And so let's talk about that. And you know, this where the debate gets really complicated is, first off, who is going to get their loans forgiven? Is it grad versus undergrad? Is it public borrowers, private borrowers? And then of course the question of how much and by what means. You accurately characterized the plan. During the campaign, President Biden said he was open to $10,000 in loan forgiveness, but wasn't clear on whether that would happen. You know, said he preferred that happen through Congress and not through the administration. Elizabeth Warren and Chuck Schumer have called for $50,000 in loan forgiveness, and of course Bernie Sanders has called for total debt forgiveness. I will point out, you know, kind of what's the rationale behind this and behind those numbers. In the $10,000 loan forgiveness category, the estimates is that if everyone received $10,000 in loan forgiveness, that would clear the balance for about 15 million borrowers. So they would, you know, have completely forgiven loans. The $50,000 number, I think, is based on 2016 research on what it would take to close the racial wealth gap within borrowers, and the estimate was $50,000. But apparently that research has been revised, and it actually might be closer to $75,000. But that's my sense of why these numbers are $10,000 and $50,000, besides just being sort of round, nice numbers. So let's just talk as quickly as I can, although this is an amazingly complicated debate of just arguments for loan forgiveness and arguments against loan forgiveness. So, you know, the arguments for loan forgiveness are many. I think the chief one is that student loans are a widespread economic burden. 45 million Americans owe $1.7 trillion in debt. It's the second highest level of personal debt behind, I believe, mortgages. We've seen an increase in default rates of students not being able to pay back their loans. We have really stringent bankruptcy laws. You know, if you can't pay back your loan, you can't discharge it. We know that students with even low amounts of debt are actually the most likely to default. And, you know, the existing system for forgiveness, many will argue, is broken. Like I said, the income-driven repayment plan, borrower defense to repayment, PSLF programs have not served borrowers very well. And, you know, people will note that, you know, with this kind of debt burden, you have a lot of particularly younger people that might be delaying homeownership or retirement savings or raising money to save a family. And this is something that's widespread, and it's impacting a lot of people. There's also some criticisms that, you know, student debt is inherently regressive, and that education is supposed to be a public good, that currently education costs too much, and it's too much for the public to bear. You know, the average debt load is about $28,000. And this doesn't even, you know, and the other argument is that the student loan servicing system doesn't, you know, work well for students, and that even students that try to get an education, it's kind of a potentially risky investment. You know, we know the completion rates on a 4-year degree are in the low 60%. Completion rates for 2-year colleges are in the mid 30s. And we know that, you know, a lot of students have been poorly served by certain institutions, including for-profit institutions. Other arguments for, there's certainly, you know, advanced a number of arguments about this being a racial justice issue, that we know that Black students and students of color borrow at greater rates, partly due to having just less accumulated wealth to begin with and less money saved up to be able to afford college, but also a sense that that students of color might over credential, but acquire more credentials to compete on the labor market where they may face inequitable outcomes in terms of hiring practices. We also know that Black students are more likely to attend lower quality schools, which means that they might get a degree, but it might not pay off in the way that they expected it to. And so there's a final argument that, and this was more in the context of the stimulus conversations, that student loan forgiveness would be a great stimulus for the economy. You'd free up people from spending all this money on these federal loans, and they could spend that on other things like buying a home or anything for that matter. But there's plenty of arguments against loan forgiveness, and I think one starts with it. Student loan forgiveness is unfair to non-college goers. We know that only a third of U.S. citizens have a bachelor's degree, and that the argument is that college is a choice that ultimately pays off for most people. It leads to increased earnings, generally lower unemployment, and so because college completers or college goers are already better off than the rest of us, that this is giving them a benefit that they don't need compared to the rest of the country. We also know that, is there anything in there for people who didn't go to college? Should they get relief on medical debt? Should they get their mortgage payments reduced? So there's that kind of that general question of fairness. There's also an argument that's advanced that actually student loan forgiveness as a broad principle is regressive within borrowers. There's an argument that half of student loan debt is actually for graduate school. Those students tend to be better off, but they also tend to be the ones that borrow more. But again, they are seeing the benefits of those outcomes. There's also been some research that suggests that forgiving student loan debt would only have a minimal impact on the Black-white wealth gap, and that other solutions may be a better option for achieving racial justice in terms of reducing wealth disparities. Other arguments are that we already have these programs, income-driven repayment plans. Like, let's just reform that, and this existing safety net could be strengthened, but we already have it there without having to go into this. And then there's, I think a bigger question of this doesn't actually solve the real problem, is that college is expensive and isn't always the right option for many students, and they may attend college and come out with debt but no degree. But if we forgive loans right now, we're not actually solving the quality and affordability issues in our education system, and that students are taking out loans tomorrow, and that this problem will just keep getting solved. And so, I do think it's interesting that the conversation is around loan forgiveness, but there's not been a more comprehensive about like what should higher education do in America right now. So those are kind of the arguments for and against. They are myriad, and they are of course very personal. Let's talk about the likelihood that it happens. In terms, let's just talk general loan forgiveness. We do know that Secretary Cardona has said that they're going to look at reforming the public service loan forgiveness program. They're rewriting the borrower defense rules. I would expect there to be a lot of focus on fixing the income-driven repayment plan. So regardless of whether there's this sort of general income or loan forgiveness, we will see a lot of action in reforming, I think, the student loan program. But in terms of general forgiveness, it's a question of whether the Department of Education will forgive loans or whether Congress itself will forgive loans. There was a big education proposal that was released by President Biden yesterday. It did not include loan forgiveness, which is interesting. Loan forgiveness would, at this scale, would be something that would probably have to go through a partisan process. It's likely not going to garner any votes from Republicans in Congress. And so it seems increasingly that this question will be for the Department of Education. We know that the Department of Education is working on a memo that they'll present to Biden sometime soon about whether they can or cannot forgive student loans by executive action. The DeVos General Counsel in January said that the department didn't have that authority, but there's been plenty of other legal analysis that says that yes, the secretary does have the authority to modify loans. But regardless, there's sort of, even if the department, Biden got the green light on that and chose to go through, it'd be a question of how much would he choose to forgive, but there's also a question of like what legal challenges could be brought against that. So it's definitely one that it seems like I would think that there would be some action, but even if there is action, the path to that actually happening, I think has a few more steps to go before we really find out whether there will be student loans forgiven or not.
So I needed you to say, and I'm sure lots of folks on the webinar wanted you to say, oh yeah, this is about to happen tomorrow, right? Some paper's going to get signed, and then all of a sudden the balance is going to say zero. But that's not what I heard you say. So you made me sad today.
I'm sorry. There's a tremendous amount of uncertainty. It is, and they're not. I work in federal affairs. They're not going to tell me anything they're doing, and it's a really complicated legal question. I would have tried to summarize the legal memos that I've read on this, but I'm not a lawyer, and it is very complicated.
Right, absolutely. Well, I definitely appreciate your laying out both sides of the argument. I think that sometimes, those of us who are on one side or another of a dispute or an argument, we see it in our politics all the time. You can kind of do tunnel vision and thinking that your way is the right way. It's nice to step back sometimes and be able to think about both sides of arguments, or multiple sides of arguments that people are considering. So I appreciate you laying that out for us. Kind of in your conversation, you talked about, and we're going to do like a hard pivot now, right? From policy to kind of this idea of personal finance, right? And in Austin, you did, I think, a nice job of laying out some of the loan forgiveness options, the consolidation options that are available. I'm really looking at Megan and Sunny now to really talk about, what's common. What are some of the more common ones that you've seen folks, or some of the more common kind of forgiveness programs or consolidation programs? Maybe those that you've encouraged folks that you work with, right, to engage with, right, to give a try. And what should we know about some of those programs, right? So what are you recommending to your clients while we are trying to figure out the forgiveness situation that we have? What are you recommending to your clients? And then what are some maybe common, what are some things that we should be thinking about considering as we're making some of those choices for ourselves? Why don't we start with Megan, and then we'll jump over to Sunny, and you all feel free to play off,
Sounds good. Okay. Yeah, I'll talk about, or I'll elaborate on a couple that I believe we've already talked on before, or that were mentioned before. But public service loan forgiveness, or PSLF for short, is probably the broadest federal forgiveness program available right now. I do recommend it a lot, and the program does get a lot of heat in the media for being very the 99% approval rate for applications for PSLF was correct. That is starting to improve over time, but there are 5 requirements that a borrower needs to know that they need to check the box for to successfully achieve that program. And so public service loan forgiveness, first and foremost, we have to be working for a public entity. So that's federal, state, local, tribal, city, any government entity. We could be working for a 501c3 or a nonprofit entity. So teachers could also qualify for this, and I'll talk about teacher loan forgiveness too. But public service loan forgiveness, kind of broad in that sense. A lot of people can qualify if they plan on a career in public service. Now, it doesn't have to be the same employer. It doesn't even have to be consecutive. If you went to a private sector job for a year and then came back into public service later, the payments you made in private sector won't count, but they will pick back up where you left off if you re-enter the public service space. So that's first requirement. Second requirement is we have to work full-time for that public service entity, and they determine that as 30 hours on average or more, unless the employer has a different definition for full-time. So if they say full-time is 35 hours, you have to work 35. You can also work part-time at 2 different entities. And as long as those 2 entities are public service, and between the 2, you work over 30 hours, that does qualify for PSLF as well. So I think biggest misconception about PSLF is that it's a 10-year program, but more technically, it's 120 qualifying payments. So the shortest it could be is 10 years. But it could be longer, if we dropped part-time for a year, or if we switched to private sector. So I think that's, a misconception with the first 2 qualifications I hear a lot. Third qualification for PSLF is we have to have the right types of loans. So only federal direct loans qualify for this program. If someone had some older loans from prior to 2010, which are called FFEL loans, or Family Federal Education Loans, they don't issue these anymore, but they did. So if you were an older borrower, you might still have them in your loan list. You can convert them into the right types of loans. That's where consolidation could come in. And so we can touch on that too in a second. So have the right types of loans, that's the third requirement. Fourth is we have to be on an income-driven plan. and there are 4, so it is a little complicated, but in summary, we want to be on the cheapest income-driven plan possible, because when we're going towards forgiveness, we want to pay as little as possible to maximize how much we can get forgiven. So the 2 lower income-driven plans currently are called Repay and Pay. They're both based on 10% of discretionary income, and anybody with direct loans has access to Repay. It does require you to include spousal income into the payment equation. So if you don't like that, you could switch to pay as you earn, which is another option. It allows you to exclude spousal income if you file taxes separately. So that's a planning conversation we have a lot of times, is if we want to keep that payment really low and the spouse doesn't have student loan debt, pay could be a better option. So those are the first 4 requirements. And then the last requirement is just making those 120 qualifying payments on time and in full. And all 4 of those things I mentioned previously have to exist at the same time. So, working full time at a public service entity, paying on the right types of loans, being on an income-driven plan. So I think that's those are some of the reasons why I think it gets a bad rap, because there are some things you have to check the box for, but it could be a good program if you're doing your due diligence and working towards that. And one really important note to make sure that you're qualifying is you'd have to submit what's called an employment certification form. This form you submit to a company called Fed Loan Servicing. They are who the government has deemed responsible for PSLF. So you submit that, they count up your payments, they verify that your employer qualifies. So it's not going to be a secret if your employer doesn't. So, that's something to know. That employment certification form is important. So that's the biggest program. Teacher loan forgiveness is very different. You can't go towards both at the same time, but teacher loan forgiveness is either $5,000 of loan forgiveness for any degree taught, or it's up to $17,500 if you teach math, science, or special education. You have to be working at a Title I school, and you have to consecutively work for 5 years. So that's a good program, I think, for folks who don't have as much student loan debt. But PSLF is I would say, a bigger bang for your buck on the forgiveness if you have a lot more of debt. And, $5,000 or $17,500 is not going to be it's going to be a drop in the bucket, essentially. So those are 2 of the big ones I wanted to touch on, but I'll roll it over to Sunny if you wanted to add anything there.
Yeah, sure. Yeah, as Megan said, those are the 2 big ones. There's also a federal funded program that allows for a large portion of your loan to be repaid if you work in a hospital or other facility that has a shortage of nurses. And this program will pay up to 85% of nursing education debt and nurse faculty. And so to qualify for this one, you'll need to be a U.S. citizen, a U.S. national or lawful permanent resident, and have the outstanding qualifying education loans, which must have been incurred prior to the application submission deadline. And so you'll have to earn the diploma or degree in nursing and then be employed as a RN at an eligible healthcare facility, which has a critical shortage of nurses. And then also that requires a full-time work, which is at least 32 hours a week. So that's one additional program. And you may also be able to have all or a portion of your federal Perkins loans canceled or discharged. And this is based on eligible employment or volunteer service and the length of time that you were in that position. And so there's a list of employment that you can have to pay that off. And so you can get up to 100% of your loans canceled after 5 years of eligible service. And this could be full-time employment at a public or nonprofit child or family services agency, You could be a firefighter cancellation, law enforcement cancellation, a librarian with a master's degree working in a Title I eligible elementary or secondary school, military service in the armed forces, a nurse or medical technician. So there's a lot that you can do to get these loans discharged or canceled rather. And then under certain conditions, your Perkins loans can be discharged. And so when, you know, it's discharged, that they just don't have to pay it anymore. And then I would say the other ones that folks had already touched on, there are also the borrower defense one, which was touched on already. And then there's if you're a student in your last year of medical or nursing or dental school, you may be eligible to receive loan repayment assistance from the National Health Service Corps Students to Service Loan Repayment Program. And so to qualify for that, you need to provide primary healthcare services to a community in need for at least 3 years. And then there are several programs at the state level that you can also qualify for. So there are a lot of, there are several programs out there, and there are a lot of requirements for each of those programs. And so, yeah, I think people, one, need to know the information. They need to have their documentation prepared because it is a lot. And, you know, that it goes to show just with the low percentage of people that actually get their loans forgiven.
Thank you both. I knew it was complicated, right? And it's almost like they constructed some of these programs because they didn't want people to do it. It seems like they made it and they made them intentionally complicated or something. That's the cynic in me. But I really appreciate you kind of walking through some of the more common programs, and then giving people just a sense of, you know, some of the qualifications and some of the criteria for those programs. I think that it speaks to the importance of having folks like you all, right? Sunny and Megan, who understand this stuff and who can help people through it, because it is really complicated. You know, and so Sunny, I guess I think about, you know, for those of us with loans, or, you know, whether it's a little bit or a lot, you know, kind of our long-term financial success, right? And our long-term financial health. And I guess I'm wondering, you know, one, you know, just kind of practical tips for us, you know, in terms of engaging these loans in a way that doesn't, that reduces their kind of influence on our long-term health, financial health. And then how do we, I mean, I want to retire one day, and I know everyone else on the call does too, right? So where do we start? What recommendations do you have, and for those of us on the call?
Sure, yeah, so some takeaways for, I would say, long-term financial success is one, know where you're starting from, right? You have to make a list of all of your expenses and debts so that you know where you stand. The second thing I would say is to write down your goals, right? And post them wherever you see them. I can't stress enough about how writing something down is really powerful. The next thing I would say is to create a budget. I like to create a budget so you can assign every dollar to a purpose, whether that's paying down debt, saving money for an emergency fund, you know, for a down payment on a home, and saving for retirement. And particularly for people who have debt, student loan debts, be aggressive in paying it off. I mean, I was, you know, one of the 44 million with student loan debt. I had close to $200,000 from business school debt. That it was $173,344 to be exact. And it can be overwhelming, even if you secure a job upon graduation. So my advice for folks with student debt is just to focus on paying it off, right? So while you do get a deduction for student loan interest, it's just up to $2,500 a year. And then that deduction on your taxes does get phased out once your modified adjusted gross income reaches a certain amount, which is like $85,000, right? And you'll no longer be able to take that deduction. So what I would do, and what I had done, was I created a debt repayment schedule where I listed all of my debts and loans separately, like not just the one monthly payment, but I listed them separately along with the interest rate, the outstanding balance, and minimum payment and due dates, and then began tackling them one by one, right? Because you can go to a loan forgiveness program, but again, that takes 10 years. And just think of what you cannot get done because you're straddled with that debt for even a 10-year period. And then once you do that, you create that plan, you create that budget, you have to stick with it even when it gets tough, right? So I like to say, have a budget date with yourself. Whether, I like to do it every time I get paid, right? So that I know where all of my money is going. Or if you have a significant other that you're making financial decisions with, you want to set up that time to actually talk about money. The other thing I will say too is to save for an emergency fund, right? Which I always suggest is like 6 months of cash set aside in case you lose your job, right? That way you can live off that money until you figure out your next move. You're not struggling to figure out, oh my gosh, how am I going to pay the rent this month? How am I going to pay my student loan? How am I going to eat? I think a lot of people, at the start of the pandemic got caught because they didn't, 3/4 of Americans are living paycheck to paycheck. So I can't stress enough that even while you're in debt, there is still a little bit that you can do to save more money. The other thing for long-term financial success is to begin to save for retirement, even when you're in debt, right? The more you save, particularly while you're young, the less you'll have to save, thanks to compound interest, and the more you'll have in retirement. And, the other thing is also to make sure that you have a proper insurance, right? So if you rent a home, you should have renter's insurance, have proper appropriate insurance on your vehicle. And if you own a home, then you should definitely have homeowner's insurance, and then also a personal liability umbrella insurance, right? Just so that you can reduce all lots of liability that could come to you in case someone gets hurt on your property. And then, once you get out of that debt, when you're on good footing, I would say just invest your money to gain passive income. So I know that was a lot, but I think there's just a lot that people should think about, particularly people who have debt. I just think that that's, really important.
Absolutely. I really appreciate that. Megan, kind of quickly, is there anything, I want to leave a couple of minutes of folks from the webinar questions. Anything that you would add to kind of Sunny's recommendations there?
Yeah, I think just in regards to the student loans, I would say I might have a slightly different approach when it comes to always treating it really aggressive. I think there are cases where it could be very appropriate to entertain that forgiveness path, or even the longer term forgiveness on an income-driven repayment plan. Because I do think that there's a healthy balance between saving and putting money towards our future, building wealth, and paying down debt. And I think there's always a healthy balance that we can strike between the two. So I use a rule of thumb when I'm talking to clients when it comes to how to treat their student loan debt. I think it's the balance to debt ratio. I think if your balance is much greater than your annual income, and will be, we need to be entertaining that forgiveness path. Because we could focus on paying off that debt. It might take us still 10, 15 years to do that. But if we weren't saving at the same time, we're going to be student loan debt free, but have a $0 net worth and have to aggressively start saving for our future after that point. So I think the longer term forgiveness or public service loan forgiveness, or whatever you might fall into, could be good to entertain if that balance is just much greater than our income, and will be, because it allows us to do other things with our money and we take a more passive approach. Now, if our balance is about the same or less than our annual income, or will be soon, then that is very appropriate to maybe consider a more aggressive approach, pay it down sooner rather than later. Refinancing could be a good option to entertain if we know we're not going towards forgiveness. We want to knock down the interest rate to help us save money and get out of debt sooner. That could certainly be an option. And that's where you take the loans to a private company to achieve better terms. So I think those are some good rules of thumb to think about your debt situation with, to help you figure out where you kind of fall on what you should prioritize. So that would be the last thing I'd say on the student loans.
Thank you both. I think this is just such a good reminder that that finances are so personal, right? It's so individual. It's kind of where are you in your life at a particular moment, and then having good people and good professionals around you to kind of help you think through making the best decisions for yourself. And so I really appreciate you both kind of going back and forth a little bit and kind of, in talking through this with us. We've got a couple of minutes left, and I think we've been following the chat pretty closely. I think we've answered some of the questions. I see some folks have dropped questions and gotten answers. But wanted to open it up for anyone in the audience, I guess, for any questions that you have. And you're welcome to unmute yourself and just and just ask your question.
I had something. So, like, as far as so this kind of leans more towards like the personal finance side of things. But I was wondering, so if you were to say, if I had like students walking in, saying that they want to do something like while they're in school, or like, maybe start like, some sort of action, like while they're still like working on their studies, like what sort of advice could you give to those students to maybe, start working on it as soon as possible? Is there anything that you'd recommend?
On the student loans, you mean, or on finances in general?
Like, I guess both, like either way, like both would work.
Yeah, I think on student loans, I think any way you can reduce the cost of attendance could be really impactful. So doing work study, working part-time. I know that can be hard for graduate students in a graduate program, but undergrad, there could be those opportunities and the time for those opportunities to reduce that the need to be borrowing or helping just subsidize your month-to-month expenses while you're in school. If you're able to, you could also be paying down interest while you're in school. You're not required to, because the loans are in school deferment while you're working through your studies. But if you know that PSLF is not the route for you, or you know that your plan is to pay these loans off really aggressively post-graduation, any little bit that you can pay towards the accrued interest during school will prevent that from capitalizing into the principal balance post-graduation, which will just make your debt pay down less expensive. So those would be some tips or thoughts on the student loan side.
Mm-hmm.
Yeah.
Oh no, I was going to say, and just on the personal finance side, I think Megan had mentioned it. If they had the opportunity to work, to get a job, or if there's something like if they had a hobby, they can turn their passion into profits, right? If there's something that they enjoy doing that could benefit someone else, then they can make money on it. And it's not like a job where they had to show up for X amount of hours each week. It's something that they can do on their own time to kind of earn extra money while they're also in school.
Awesome, thank you.
Other questions? I've got a few minutes left.
Hi, everyone. Thank you so much to our panelists. This has been so informative. I'm glad I was able to attend today. I had a question about DACA eligible students. Maybe this question is for Andrew. I'm just wondering if there have been any state level policies that have been passed that extend forgiveness to undocumented students.
Off the top of my head, I believe there have been a couple proposals, but I don't believe there's been any enacted bill specifically looking at DACA or undocumented students that have been enacted.
Okay, thank you.
Other questions? I do have one. I'm just going to ask it. Facilitators point of I guess what is it called? I'm just gonna ask the question. I have heard, I feel like 20 different explanations as to whether, or kind of answers to this question. If you get your loans forgiven, right? So if I go through the PLSF and they get forgiven at the end of the 2 years, I checked all the boxes that you all talked about. Is that taxed? Am I taxed on the amount that's forgiven or not? Somebody help.
Yeah, the public service loan forgiveness is tax-free. There's no tax implication for that forgiveness. You might be getting conflicting answers on that because the longer term forgiveness, like if you, being on an income-driven plan, pursuing longer term forgiveness after 20 or 25 years, depending on the plan you're on, that is taxable currently. Well, kind of, because let me maybe go back. There was a recent stimulus package that was implemented where they snuck in some language to make student loan cancellation and forgiveness between now and December 2025 tax-free outside of PSLF because it was already tax-free. That is temporary. That was maybe in anticipation of some kind of forgiveness that Biden or Congress was going to implement. But longer term forgiveness, we know to be as taxable unless they make this language permanent after 2025. So that's probably why you got conflicting advice, because the longer term is.
Thank you. I think that's literally the best explanation I've ever had of that. I've been so confused. So thank you. So thank you. So if I'm on PLSF and I get forgiven, I'm good. No taxes. If I don't do the paperwork and do the PLSF and I go the whole 20 years on the income-based plan, whatever's left is taxable.
Correct.
Which is probably going to be a lot because you're not really making any principal payments if you're on the income-based plan.
Yep. So part of the planning that we'll do for folks where that makes sense, because it'll still mathematically make sense for folks whose balances are greater, much greater than their annual income. Because even if there's a forgiven balance that we're taxed on as income, we're paying pennies on the dollar compared to what it actually was. So if that's the path, I still recommend now to save for that potential tax implication. And so it's pretty minimal. You've got 20, 25 years to save for it. So we have some time to, let those assets grow. And if the tax implication is eliminated, then we have extra money that can go towards retirement or whatever the next financial goal is.
Wonderful. Thank you. We are at 2 minutes. We can entertain one more question if it's a short one. If someone has that burning question, we'll tip of your tongue. We got the experts here. Now speak now or forever hold your peace. Not forever, but just for a day. Any other questions? All right. I'm not seeing any. So with that, Andrew, Sunny, Megan, Austin, thank you so much for joining us today. I learned a lot. I imagine that the folks in the webinar, and you can see in the chat, learned a lot as well. It's amazing to be able to kind of pick your brains, right? The folks who are on the ground doing this work daily, helping us to be better in terms of our finances, but also kind of keeping an eye on what's going on with the policy level and how that's going to influence us and impact us in our daily life. So I thank you for your time. I thank you all for your work and for being with us here today. So with that said, take care, enjoy your afternoons, and the summer's almost here, so let's go.
Thank you for having me.
Thank you.
Yes.